Hi, this is Binu from JRG Securities. InfoEdge was the first internet company to be listed in India. The site enjoys a traffic share consistently over 60%. The company employs over 2,500 people operating through 57 offices. India currently has 120 million internet users, which is the third largest internet population in the world. However, the overall internet penetration in the country is only around 11%. By 2015, India is expected to have 330 million internet users from the current figure of 120 million. The economic contribution from internet in India can be potentially doubled from 1.6% of GDP as on today to 3% by 2015. InfoEdge has the potential to play a significant role in this long-term growth of the internet economy in India. The brands in the portfolio are Naukri.com, 99 Acres, Jeevansathi.com, Shiksha.com. In each of the core businesses, recruitment, real estate, matrimonial and education, InfoEdge is amongst the top 3 in the industry. The company invests in new businesses which are at the early stage of the development. In the last 5 years, on a standalone basis, net sales moved up at a CAGR of 15.4%, EBIDTA up by a CAGR of 19.9%, and the net profit up by 14%. For FY13, the recruitment business top line grew by 11%. In the 99 Acres business, top line grew by 48%. In the Jeevansathi business, net sales grew by 27%. Risk factors. InfoEdge reported EBIT margin contraction of 380 basis points quarter on quarter in Q1. It was because an increase in salary costs and advertisement expenses. Subsidiary companies are right now losing money. Do not expect any of them to break even in the short term. However, they need more investments from the company. The company's new investments have potential for very high returns, while there are relatively higher risks of failures as well. The company had write-offs in the past. In the coming quarters, we expect growth rates to remain subdued due to weak economic environment and continued moderation in hiring activity. LinkedIn growing aggressive in India and competitive threat from Monster.com. Management reiterated that margins are likely to remain under pressure if revenue growth remains below 20% year on year. Notably, advertising expenses increased meaningfully in the last year. The investment rationale. For FY14, the revenue is expected to go up from 437 crore to about 500 crore and a 30% increase in its net profit. At 300, the stock is trading at 25 multiples of FY14 expected EPS. The stock has historically traded at a 36 times forwarded PE, and now it is trading at a 4.8 times its book value. InfoEdge is to benefit from the increasing internet penetration and demographic profile of the country due to its leadership position in 2 major verticals, recruitment services and real estate. The company expects to retain its market share in the tough market environment as it continues to invest for brand building and product development. However, it is relatively a long-term play, and macro environment could cause disappointments in the short term. The company announced 1:1 bonus for shareholders in 2010 and 2012. If you check the price movements, after February 2011, the stock never closed below 280, and recently a couple of bulk deals reported in the counter, wherein which around 3.5% of equity exchanged. The stock is trading in a downward channel and may take some more time to break out from this formation. Those who are planning to invest for medium to long term can accumulate the stock at 300 to 280 levels for a target of 326. Disclaimer: